Ethereum Classic is up almost 7% today, and it's almost looking like any sign of a pullback may be reversing very quickly, but I don't think we're quite out of the woods yet. We may have another sale opportunity coming very soon, and this may be just a breather, but that is not reason to worry because we may be getting an incredible buying opportunity that would project us quite high up. So stay tuned to see what my targets are for that. We're going to start off with our linear chart. It's the 30-minute chart for Ethereum Classic, and well, we can see this big garish looking wave down. Is this a 1, 2, 3? Is this an ABC? It's not clear yet, but we've pulled back pretty dang sharply. And when I look at the entire structure, we've already surpassed 76.4% retrace. So that's usually a sign that this is not going to be going back up, at least in impulsive fashion. And if anything, this looks like an ABC correction as I drew in our last update. So everything's still pointing to us having lower low. That doesn't mean that we can't have a bit of a breather. Maybe this is a second wave back up. And if that is the case, we are looking at something like this, assuming that this is the bottom of the first wave down, and we'll have our standard 61.8% retrace. We could bounce up to about 32.50, somewhere around there before finishing off this pullback, possibly down below $11. Now, does that align with our big picture? Seems to, so we're going to look at that a bit more closely in just a second. But if there's any chance that we salvage our green pattern and start rallying in possibly some leading diagonal kind of fashion, we need to see a sharp reversal right away, and we need to see a higher high than the high that we hit right around 37.50, 37.60, wherever that high was. Now, shifting to our big picture chart, it does look like we're going to drop in this blue box. This chart is, of course, available in the description below, so be sure to look out for that link if you'd like to follow along. The blue box is our ideal pullback point. That falls around 14.25 all the way down to 7.45, and that is based on some Fibonacci equivalences, primarily this pullback from May 2021 being the A wave, this rally being the B wave, and usually you have an equivalence. You'll typically have your C wave equal and linked to the A wave, so 1.0 extension, that would be the 14.25 mark. There's also some confluence there from elsewhere. When we look at this top in September of 2021 to the December 3rd low, if we call that possibly maybe the third wave down, or even this is an A wave down, whatever it is, there's some Fib confluences pointing down there as well, the 1.236 and 1.382 extensions. And then finally, we have our 61.8% retrace of this entire rally up to May of 2021. And assuming this is an impulse, this would be the ideal retracement point. So a lot of signs that we are actually about to pull into that box. And from where we are right now, about 26.72, that could be almost a 50% pullback. So it sounds painful in the short term, but that doesn't mean we have quite a rally structure set up, which we're going to touch on momentarily. But this is what we're going to be looking for. Once we break our support at 21.23, which is this thick red line, that pretty much means the green pattern is validated, and we are very likely heading down the blue box. We are seeing a rebound across the crypto space, including Bitcoin, Ethereum. So we may be seeing a short-lived bounce before we see more downside action, but there's a lot of downside action potential in Bitcoin, Ethereum, because the pattern doesn't look complete. Although in Ethereum Classic, it could be. There are other cryptos such as Bitcoin Cash and EOS where things look like they might be complete, but overall I'm leaning towards a slightly lower low. And in the big picture, it's not really that much further now. So once we hit that box, that would be a great time to buy because it's time to be greedy when others are fearful. This is when everyone's going to be, well, think about dumping the cryptos, giving up all hope, and that would be the time to buy. And well, Ethereum Classic has quite the upside. You may notice that this is no longer set up as a 1-2. I'm going to explain big picture why that is. But in a nutshell, this is this would be an ABC pattern up to complete our larger diagonal, which again, we'll look at in a second. And that projects somewhere between $70 and $178. So from where we are at the moment, that would be a 3 to 4x return at least. And well, if we fall another 50% from here, double that return. That could be a very quick return within a matter of weeks or months if that happens. So eyes on the prize. Don't get caught up in the panic and the depression. So that is what I'm expecting. Again, getting close to a shift in sentiment, but we need to extinguish the selling pressure. Big picture, long term, I have reinterpreted what the pattern for Ethereum Classic is. In my opinion, this lines a bit better with what I'm seeing in Bitcoin Cash, as well as a couple other cryptos as well, Litecoin, where we have a large diagonal setup potentially. And this is based on our rally having started in December 2016. This could be an impulse. This could be just an ABC up. Not totally clear, but assuming that this is the first wave and this is the second wave, one can easily make the case that this rally in the May of 2021 is actually an ABC. That's what these purple letters are indicating. It doesn't look like an impulsive wave because our third wave was a bit substandard, and well, we didn't have a very proper looking fourth wave. So for a variety of reasons, this does look more like an ABC corrective wave up, which can be a bad sign, but it's actually not as bearish as it may sound at first because within a larger diagonal structure, each of the subwaves, all 5 of the subwaves, will divide into corrective waves. In other words, ABC zigzags up and down in both directions. So if that is the case, this is a big ABC up for our third wave top. We're in the middle of an ABC down for the fourth wave, which is of course notated with this big purple fourth wave. The purple is just indicating a long-term pattern. I want to keep that neutral because we got red and green in the short term. And that leads us to why I have an A and a B instead of 1 and a 2. If we are to have a continuation of this diagonal pattern and well, we have a fifth wave, that fifth wave will very likely take, well, it would manifest itself in the form of a three-wave ABC pattern, as you see here. So therefore, instead of a 1-2 pattern, I would expect to see an A-B pattern. What's the difference? Typically, an A wave will be a three-wave pattern. So instead of seeing an impulse up, you may see something that looks more like this, something like this, three-wave pattern up. It could be an impulse. It could be a straight shut up, something like that. So it may look very ominous at first if you're only looking at just this in a vacuum, but big picture, you know that this could be a diagonal up. So despite seeing a corrective wave up, that would presumably be a bullish sign. You'd expect to see a three-wave correction down, maybe a sharp correction. I'm going to assume it'll be a 38.2% retrace because that is what we saw back here in our 2021 rally. You saw the A wave and 38.2% retrace off of that. So as Elliott waves are fractal, I would expect something like that. And then we would be off to the races. This final leg would very likely be an impulsive form because C waves are usually in the form of an impulsive five-wave structure or a diagonal, more likely an impulsive structure. So once we get through this cluster, it would be very obvious that we're heading up sky high. How high, you may ask? Well, based on the patterns that we have, based on the existing structures, this is a 1-2 right here. Your diagonals, the third wave will typically fall between the 1.0 and the 1.32 extension, 1.236, and well, we fell a little short of the 1.0, a couple of dollars, maybe $20, $30 short. Doesn't mean we can't hit our ideal extension points for the very end. So anywhere from the 1.32 to the 1.618, all the way up to the 1.764 extension. So that could be from, well, where we are right now, about the $25 range, where we have $42, $26, I'm sorry, $26 all the way up to, what is it, 562. That would be a very likely point of completion. Again, fifth waves typically go higher than the 1.32. So the 1,034 mark is a conservative target. Yes, that is a conservative target. From where we are at the moment, that is a 39x return almost. And remember, if we do descend into that blue box below, take that number and double it. That's about what we're looking at. Sounds crazy. I know I keep reiterating that it sounds crazy, but that's what the numbers are showing. But these cryptos, these altcoins have done crazier things before. And not only that, because we have a diagonal pattern, this actually fits very neatly within diagonal trend lines. As you see here, trend channel lines, one up bottom, one at the top. And we can actually get a decent time estimate based on that. So assuming we hit the, let's say we hit the 1.236, a strong Fibonacci target, that could get us there maybe mid-2023. The 1.32 will be a little higher. So again, mid-2023, maybe summer 2023. But here's the thing. We do have a lot of overhead space to go up. So while we may be projecting that far out in time, you often see what we call a throwover and ending diagonal. So we may blow right past the trend channel line. That is not unprecedented. You see that kind of thing all the time in various things, stocks, cryptos. So do not be surprised to see something like that. So in the meantime, get your buying plans ready. I'm going to be putting some videos out there showing us what the risk rewards are for different altcoins. So don't forget to subscribe so you don't miss it. And most importantly, diversify. Ethereum Classic is awesome, but so are a lot of the other coins. There's a lot of great altcoins. They all have high risk, high reward, some better than others. So fall in love with not just one, but 7 or 8, maybe even more than that. So until next time, thank you for watching and happy trading.